Hello, everybody. Welcome back to pre-ECB. Everyone give me a Y if you can see my Dixie chart up there. Just do it in the question box. Yes? Okay. I'm assuming you can see Dixie. Team?
I can see it, Dale. Good morning.
Thank you, bro. Okay, so pre-ECB into Draghi. Remember talking to Amelia, and from what she said, Draghi's going to try and talk the euro down. Okay, so perhaps some people front running. We have some technical divergence here at a confluence of support. So I hope he's successful, at least intraday, because I'm a willing seller up here at 97.5 to 97.80. Should the euro sell off, still think there's potential for lower numbers in the euro. I mean, higher numbers in the euro and lower numbers for the dollar, but right now you can't fight it. What's interesting is the dollar did make a new low last night. Yen did not. Okay, so yen put in a higher low. Yen's trying. I tried the line, made some money. I'm flat now. Something I want to point out that I think is really going to be something major in the market. Okay, so I want you to look at the 10-year yield right here, and it's down a couple bips, right? Look at this. Everyone see it? And now look at the 30-year. Look how much stronger the 30-year is. So even if we get a dip to another new low for another divergence down here in the 10-year, I don't think that's going to happen in the 30. So what does that mean when these two charts, you show relative strength in the 30-year paper compared to the 10? Anyone know what that means? It's the opposite of what everyone's been talking about for months, the inversion of the yield curve. What's the opposite of an inverted curve?
Steepening.
You know what? You get a smiley face and a gold star on your paper.
All right.
So, I mean, this is the last thing the market's looking for right now. I mean, what's the market worried about? It's worried about inversion, right, bro? And if you look at these two charts with this having better looking structure that it may already have bottomed on the 30-year and the 10-year still looking weaker, to me, that means that if rates are troughing and start to head up, they're going to head up faster on the 30-year, which means steepening, which is why the banks took off yesterday. Okay, so financials, especially the banks, they want to see a steepening curve, not an inverted curve. And this may even take out some of the fear in the market. Maybe it's enough to get us to blow to new highs, this rally. I don't think this is the final low in rates. I think I've seen, even Greg, I think, talked about this could be a 4, and then one more decline in rates for 5. And then, I think that there's a lot of upside in rates and downside in bond prices. And I think Steve asked me the other day when we were up here, and I'll just use a TLT as a proxy. It's not open yet, but it's what I trade. I don't trade bond futures. I do go with the ETFs. So let me just find TLT here. And I think we're very fortunate. We're going to have Paulie with us today.
Dollar steadies amid back and forth action.
Yeah, there's some back and forth action. Anyone want to hear some CNBC analysis on the euro? Okay, if the euro goes down into Draghi but holds support and then it begins to rally but hits resistance, it could pull back again unless it breaks through resistance, and then it could go higher unless people begin to sell it and negate the breakout. So that's CNBC. Where is that darn TLT? Here we are. Okay. So I think Steve asked me the other day, I think it was up here. Yeah, you put a piece on, it's not over because what kind of high is this on the daily? Yes, we're getting some short-term divergences on the 1 hour. And even this was above my ideal above 70 at 75. You really have to go down to some very short time frames to not have confirmed highs up there. Also, in TLT and in the bonds, you have some gaps here, all right? So, you know, maybe we're just going to go in, fill the gap, and then head back up. But I think there's an important high setting up here that may also put in an important low in US dollar yen. But if there's one more high left in the bonds, I still think there's a chance that we get a 3 driver here in the yen. Okay, so you can't see it on the daily. We're actually getting a 2-day reversal if we close up here. But here's the 1 hour. Okay, here's 1, 2 diverged, and that's the current pop we're working on. Almost looks like 840 is a little bit of a neckline. We get through that, you know, then you're talking 109. Okay, but there still is a possibility of another shot down for a 3. But, you know, I'm not going to short it in case there isn't a 3 drive. So just something you may still be doing that I have to catch myself and not click my mouse is because I'd be a buyer down here if it happened. I used to think, well, you know, I'm pretty sure it's going to go there. I'll short it and I'll ride it down to where I want to buy it. But that's not the trade. The trade is if we're down here again, I'll probe it. But I used to think, oh, you know, why watch it? I mean, I think it's going to do it. But that is not the trade. The trade is trading a 3 drive, not trading something that may or may not happen. You guys ever do that? I'm not seeing anyone using the question box today, but that's okay. If anyway, don't do that. So S&Ps are following through. Probably has some type of retracement. Okay, Tom's done it. So, you know, it's hard to believe that this is going to be it and we're going to blow to new highs. I don't know what to do with them. So I guess I'm doing nothing. I would know what to do if we made a new high. I would know what to do if we took out the low that Blake pointed out and Steve pointed out when we came in here Monday. I'm telling you guys, I don't know about you, but just hearing from the crew, and Paul Franco's going to be with us too. I have a better edge. Ever hear steel sharpens steel, or is it iron sharpens iron? So, you know, you need to surround yourself with traders that might be just a little bit better than you, that have been around longer. Thank you, Zig. That have been around longer. Hang out with them in the chat room and, you know, put in the time. The secret to trading is there is no secret except hard work and perseverance and surrounding yourself and putting yourself in a conducive environment, which if you're just trading from your home, at times you need a community. You know, I believe in communities and masterminding, and I've seen it work. It's not a theory anymore. It was a theory when I started LAR on FX Street. Could we put together a group and attract good traders that would share ideas and make the whole group, the community, better? Well, I saw it work there. I've seen it work here for over 2.5 years. So if you think FACE is enough for you, an hour of analysis plus an interview, I think you need to reconsider that. You need to put in at least, and if you work, you do it after work, I think minimum 4 or 5 hours a day into this. And for most people, if you said to them, you know what, you have a full-time job, but it's 4 or 5 hours a day, they would go, thank you, I'm in. So you can't learn experience. It only happens with the passing of time and living through stuff. Live through stuff at ForexAnalytix with this team. Decades. Centuries. Decades, centuries. I had to do that before Joe, before Blake did it. Paulie's going to be with us today. And, you know, I can attest to on Twitter and in the chat room the value of this Top Gun right here.
Coach, just so you know, we have ADP non-farm payrolls in about 5 minutes, and I am here, but we do not have ECB today. That is tomorrow. So just
I thought maybe the market was front running what he may say tomorrow, because don't you think Draghi is going to try and talk the euro down tomorrow, bro?
I don't. I mean, I don't know how. I mean, the market is already anticipating a pretty dovish ECB. So it really depends on how dovish he is. I don't know.
Think the more dovish, the weaker the euro might get.
Correct. But I mean, I don't know if he's really so much concerned about exchange rates at this point in time, because, it's not like he's looking at a technical formation of the euro. What we've seen the last 2 years is the exchange rate's actually gone from 120s, mid 120s to 112. So I think he's probably thinking hey, it's the stability, it's stable.
Yeah. Well, you know what? He needs to spend more time in our chat room.
Yeah. Well, I mean, the euro, if anything, there's no stabilities, or there's very stable right now. So I don't think he's really worried about, if the euro was, trading at 140, or if it was trading down below parity, he'd probably be a little bit more concerned with exchange rates right now. But I think overall, he's not really so much concerned about that. He's more or less,
Deutsche Bank, maybe.
He's probably more looking at, it's how we're going to see growth prospects. And the euro was actually trading higher this morning, and here I'll take over really quick.
Sure.
Give me 1 second.
Look at Joe Perry on that screen, Mr. Bloomberg.
You guys can see my screen here. So so the euro dollar was trying to break into highs, and you can see this big black or red candle that is overtaking the market, and that really happened when I believe, and so just so you guys know, my internet went down as soon as I got up. I was just powering up Bloomberg, and then all of a sudden my internet went down, and it's they were doing work. They were doing work on my internet here. They do it at the middle of the night. Well, for me, the middle of the night is in the beginning of my workday. So for everybody else that lives in my area, they're going to wake up to a fresh new internet speed. For me, I got up and my internet was down. So but there was some news, and maybe Stelios can help me here. There was some news that Italian debt is going under review. Is that what it was? I haven't had a chance to go back and read those headlines.
You've actually caught me. I actually don't know. I have to search it up because I was away for most of the morning.
I believe that's what happened. Is that Italian debt is under review, and then all of a sudden the euro came under pressure, and that was like just as I was powering up, and you can see the euro just came under pressure. We broke from the 80s down to the 70s, and then we've been trickling down. Now the fact of the matter is the dollar index really is holding 97, and that is really key. If you read the blog last night, if you've seen our chart of the day, it's really just critical here. We are 1 minute away. Let's take a look at the ADP numbers. Let me grab calendar, open data flash. There's data flash right here.
By the way, Scott, our friend Scott says that Italy is to be fined by the ECB. So that's
so that number came in obviously a little weaker than expected. And you know what? It's interesting. It came 27,000 jobs Wow. So the move was already happening
Wow.
before the number was released. It got it happened pretty quick here. Hold on. Now it's starting to feed through the market. Just bear with me really quick. I'm just doing a couple of things. I'm just trading out of some stuff. Just give me a second.
Actually, while you're doing that, let me just mention one thing. Dale talked about the 30-year yield and the 10-year as well. Just one thing I want to mention based on my own experience. You remember, I used to be a market maker in London in swaps, and the bond guys sat next to me basically, and I could see everything they were doing. And the treasury traders always told me that the 30-year, anything above 10 years is driven almost purely by flows and not really by any fundamentals or anything. So if you see the curve still 10s, 30s steepening, it's mostly because of flows. Anything below 10 years, especially a 2-year note, is all directly influenced by the economy and what's happening to the Fed.
Yeah, but the question then is what drives flows?
Oh, you could have a new issue of some benchmark bond or even corporates, and then they're hedging, and could be anything, or it could be like I like swaps, the long end swaps trader who used to sit next to me. If you wanted to take a view on the spread between swaps and bonds, which is something that traded a lot, it could mean that he would have to do a big trade in 30-year treasuries as part of this spread. And then if that happens, then the guy who took the trade on would have to go and hedge it and do all sorts of stuff, and that could move the market as well. But yeah, I mean the long end could be influenced very easily by a customer order or anything that could any kind of new issue or.
So we're seeing a little bit of a move in the yield curve, is what you're saying.
Yes.
Okay. Hey, real quick, guys, I want to mention just a couple of things, and I'm going to pass it over to Paulie because Paul Franco is here. Look, I had some dollar shorts going into that number. I just scaled out of everything. I had some cable on. I just took that off. I had the euro on. I just took that off. I had the Aussie on. I just took that off as well. So I came out ahead, which is good. Now the question is, well, why don't I hang on to it? Because obviously the dollar is continuing to weaken here. Actually, the only pair I really want to be long right now is actually the cable, believe it or not. And I know that sounds kind of crazy, but here, let me just reference just a couple of things. I'm gonna pass it over to Paul Franco. So the euro dollar, really big resistance up here. We have to get a close above, in my opinion, 112.75, 112.77. You can see this. We are very overbought on all of these. Look at all the relative strength. We're just, really overbought. The Aussie is stalling at the 38% retracement. The Kiwi is stalling at the 38% retracement. The pound is stalling at this 127.17, which is a 618, which is, it's a big level right here. And that means, here's the dollar index at 97. If we close below 97 today, I'm going to be very bearish the dollar. I'm, like I said, I came in short dollars. I just took them off. I'm going to hold off for just a bit, probably till after ISM. But the dollar looks weak. People are trying to bottom pick this dollar and trying to get, buy off this support. Look, I don't know if I necessarily trust the dollar at this moment. The dollar looks extremely vulnerable. So anyway, I like the cable on the long side. I think the cable's got a lot of room to rally. And man, look
Kiwi, that's why I interrupted.
Yeah, just
Kiwi's taking off.
Anyway, hey, I know Paul's here, and I want to pass it over to Paul. But now, if you guys don't listen to Paul, he's got 2 shows that he does. He does the oh, here we go. Paul, you're gonna have to take over. He does the European crossover, and then he also does the North American, end of session, pre-Asia session update. Paul Franco, we're excited to have you here so you can talk a little bit about what you're doing and what you're seeing. So, Paul, you are still muted. You need to unmute yourself. I'll unmute you. I'm trying to unmute him. Can you guys?
I don't think you can unmute him because he's
Okay,
muted.
can you hear me now?
No,
yeah, we can hear you now, buddy.
Okay, can you see my screen?
Yes,
Yes.
mate.
Okay, I tried to comment earlier. The news about Italy, that was already on. We did the, and I'm going to try and explain the European crossover. And today's a perfect day. The way I look at markets, I look at price structure, which I know Blake does, but I'm going to look at price structure on a little bit longer term and one intraday. The Italian news, if you follow, and today I actually put the European crossover webinar out there on Twitter so everybody can kind of get a feel on how we approach things, and that's for the subscribers for ForexAnalytix. The webinar is posted later on YouTube, but much later. We do it live at 4 a.m. Eastern, and then Stelios records it and is posted for the viewers or those in the chat room well before the New York Open. So if you're not up during European trading, you can see that. Hey, look, the news was already out about the Italian debt and what's going on there. And so the market kept going higher. So that's not the reason why the euro started to go on and move lower, and we're going to move into the euro. That's going right here. And we were watching it. We already talked about that. That was one of the reasons we actually, this was my, if we go into the bias chart analysis, this was the analysis. This was my resistance for today. I was off by a pip. But we were trading in, I think, at the 1260s at the time, and we're actually pushing even higher. I have actually a stretch at 1293. But here's the deal on this. As far as the Italian debt, we already covered the news, a real quick news blurb, and we're pushing higher. So watch this 1293. But it said the European Commission will announce whether it will launch disciplinary procedures against Italy over the debt-laden public finances. And so La Repubblica, which is in Italy, it's a newspaper, had already printed that they were going to receive that report. Whether it's true or not, we'll see that. But we were down here. So it was really a matter of the market pricing or pushing higher and putting the shorts' feet to the fire, how far we could go on and push up. Now, as far as the ECB, I'll touch on that. And that was one of the reasons I got a scalp off up here. I was in the chat room. Right here, 1284, covered some of it, a little bit lower, and then covered some more at, I think it was 1264, something like that. And I put on here, we had some support here at 1250, 59 or 50. No, it's 58. 58 is this old level. But here's the deal on this. Okay, so if you're looking here with the ECB, and we're trying to go in and lay a little bit of strategy where we go here, the thought on the ECB is not whether Draghi's going to go in and cut back. What they're potentially looking for is they may do a little bit of extra stuff through TLTR. Says TLTRO, the European Central Bank is largely expected to offer a targeted loan referencing operation, TLTROs, cheap loans to jumpstart slowing economic growth and inflation. So when I was taking a short up against this level, and me and some of the guys were talking, say, hey, look, it may not be able to run too far because, you know, the ECB is going to come out. I think the euro's a buy overall. But like I said, we got this poor ADP, absolutely abysmal. And one of the reasons that, and I'll move into the dollar index and now touch on what I refer to as price structure from a longer term, and then we'll focus a little bit on a shorter term. One of the things that we've looked over here with the cash dollar index is it's been this key weekly level, 97.89, which also happens to be the 61% of 88.23 to 103.83. We know that the market multiple times was trying to jump above this area, had some difficulty. The last time it run, it looked like we're on our way to Venus. Now, one of the things that I covered in the New York Daily Wrap-Up yesterday in reference to the dollar right here, we'd mentioned 2 Thursdays ago, we had the worst manufacturing data in a decade. And I kind of rode that little pony for several days, all the way until last week. My case being why I thought the dollar was, you know, suspect to go in and move lower. I don't think the dollar's been priced to perfection, but the dollar's been, you know, moving higher because we had a divergent central bank policy, good economic data, but little by little, there's been knocks against the armor. Worsening data. To me, the straw that broke the camel's back was that manufacturing data 2 Thursdays ago, worst in nearly a decade. Look, folks, whether you thought the Fed was going to do a cut or not, you had to factor in that the market was now starting to price in a potential cut. Now I saw yesterday there's a potential for up to 4 cuts through next year. Obviously, Bullard made his comments that helped kick grandma down the stairs, that being the dollar. Powell made his comments too. Look, when we started the week off, we said the first target is 96.63. That's the 38% with initial support at 97.20. Well, it did hold there initially on Monday, and then from there, we're now starting to go in and slide back here in the dollar. My take is, and I was mentioning here with the euro, and just to get, and right now, look at the euro, new highs in the euro. We've got, my stretch was 12.93, but we can move higher. And I was mentioning on the European crossover this morning. Once we get past ECB, I mentioned, don't be surprised if we get here to 13.24 and this 13.18. And my take on that, and look, is when the euro started breaking out, and that was when Bullard made those comments, we were already holding the 112 area. 1237 was a 38%. This market just went by 38% like ain't no big thing. So that afternoon we were talking about like, hey, look, there's a good resistance level at 1258 here, but we've also got a triple confluence. Well, we did go in and pull back. So anybody that was short, and look, we've taken out 13. I think this is going to be an excellent area right here at 1318 because we still have the ECB. So we may pair back in. We're really dusting off the dollar bulls, and just to play into that, obviously the poor ADP just is pushed us even further. We might get one more push up here. This is probably not a bad idea if you were wanting to scalp short before the ECB, because once again, I don't think Draghi's going to have to necessarily talk down the euro. The TLTRO package, that'll probably pull this down a little bit. But my take was we were looking for support potentially down here. If you were bearish and had been selling this thing on the way up, you probably thought, well, we'll make it down here about the 12 teens, maybe 1206. I can cover this short or that short. Look, folks, we barely went down into the 20s, and then we rallied right back up, and here we were back in the face of 12 to 50%. So this market hasn't even backed down yet. So gave you an indication that it's still wanting to push higher. One of the things I was mentioning in the chat room to people, I was saying, hey, look, these shorts are going to have to cover, and that was yesterday afternoon, and we were in the 40s. I go, we're going to have a nice undertone bid in the euro as these people have their toes pushed up against the fire and have to scream uncle to go and get out. Now, this morning, we already had the news about Italy. That was even before we had the European crossover. Hence, my take was that, look, our bias chart resistance, I said, look, I think they're going to want to take out these stops, but I don't think they can push too far. So we put it, our bias chart resistance was 1287, and we took it out by, I think it was a half a pip, maybe 1 pip. And we saw the market pull back, altogether almost 30 pips. But here's the deal. We got that worse data again. And here's my take on that, just to kind of, and we'll go over the rest of these charts. Look, anybody that was bullish to euro, they'd say, well, they'll say, you know what, things look terrible in Europe. I don't care what happens. It's a big mess in Europe. I'm trying to see if I can change screens. I don't think, let me see. I don't think I can do it on here when I usually do the webinar. Okay, yeah, I can. Let me go on and move into, hang on 1 second. There we go. So let's go and move into the bunds. New all-time highs in bunds, or actually, rates as far as new lows in bunds. So you're thinking, well, this is crazy. Doesn't the euro usually go lower, or is restrained as the bunds move? Rates on bunds move lower. Prices obviously move higher. Yeah, that's true. But let's go on and move back in here, and I'll show you what I'm referring to. And I've made this analogy the last couple of days, okay? And like I said, this is not a bad place to, if you were going to take the short on the euro, going into the ECB because they might introduce some TLTRO. Look, here's my take on this. When you're looking at the euro and people saying, well, look, the Eurozone's a bunch of junk. The place is a big old mess. What about the Italian debt? Yeah, but you know what? Like I mentioned last couple of days on the New York wrap up, tell me something that I don't already know, okay? So here's the deal. When you're looking at the dollar index, here's my and going back into the euro. Let's say that you bought the euro in the last couple of days, or you're thinking, I think the euro is a little bit overdone, and let's say you're proven wrong. My take was from looking at it from an analogy standpoint. If you're wrong, you fell out of a one-story window. You're not going to break your arm. You might sprain your wrist, okay? If you're wrong here on the dollar, for those that have been and continue to remain very bullish up at these upper levels, and let's pull this dollar back, and we're looking at the daily chart here, and doesn't mean you bought the top. Let's just say, like I said, you were long for 98, you're long for 97.80, you bought some more from 97.60. Look, when you fall out of this third story window, they're going to call the Undertaker for you, okay? That was my take, is that, and and what I'm looking at is, I think that we've seen a shift.
I've drawn this line a little bit differently, Paulie.
Okay.
But still, it's a key area. If the dollar breaks down from there, it's all hell will break loose. And I just wanted to remember to tell people that we posted yesterday night a new blog post about the dollar, and the key juncture that several major dollar pairs are on. And I strongly suggest that people have a look at it. It's free if you visit ForexAnalytix.
Yeah, it was a very good blog post. And yeah, and I retweeted it myself. But my take here with the dollar is that it's not just only from a technical standpoint, because on the show we'll cover a little bit of news to get what we like to talk, the flavor of the day, the tone. The data has been worsening for the dollar, but the reason the dollar has been able to hold things is not only the economy has been better, but we've had a diverging monetary policy. But now we're starting to see that change, and you have to reprice this for that. That's why we're seeing this continued sell-off, and why we have the potential to break even further. Now, today we have a bias chart support at 97.79. We might even be able to break down here and get down to this 38% if they spook them. But I think the euro can't punch. We've already taken out 113, which is phenomenal at this point. But we may have a problem getting too much higher, because I'm not sure people want to buy it right ahead of the ECB, and they may introduce that TLTRO package. Another one, if you wanted to go and look at it along those same lines, was the dollar CAD. And it's the same thing that I'm talking about that we were referencing as far as price structure. And we covered on the European crossover, we covered over multiple times on the New York wrap-up. What we called before was the elusive 3504. And we had mentioned that, on Friday, the market finally closed above the elusive 3504, but the daily candle has bullish concern. A daily close below 3470 will initially target a test of 3382. Okay, so what you're looking at is, and I mentioned this the other day on the, just not even on the wrap up, and you can see that live every day. We've multiple times the dollar CAD popped its head up above the foxhole, and every time it did, it got shot down. Every time it did, it got shot down. Every time, and I like to speak in analogies, because to me it makes it easier for me, at least for me, to go on and get a feel for the market. We can look at the technical levels, but I'm like, oh wow, every time he pops up above the foxhole, he gets shot down. Okay, shot down, shot down. Finally, we got above it, and it looks like, okay, we're on our way. Here's a 78%, but we closed on Friday very weak. So my take was, and you can see I like to draw my resistance not above the highs and the lows, because I always say, how many people sold the high and how many people bought the low? But the closes, whether you're looking at a daily chart, a 4-hour chart, a 2-hour chart, an hourly chart, is what makes the big difference. Because to me, that's put up or shut up time, because at the end of the day, those that have to get out of the position are going to have to get out. So this level is very important on the dollar CAD. And my take was, I mentioned that in the chat room for Monday, I go, look, we closed below 34.77. It's a straight up sell, because the bulls finally got the high, and we turn around and now we lose this. We lose 35. And so we've seen that continued follow through. We did make it here to 33.82 yesterday. We saw a bounce, and today's bias chart resistance was 33.62, and we've made it to 33.63. But to me, it looks like, once again, we're looking for much lower prices here with the dollar. Now we are seeing, looking here, the dollar yen. The dollar yen is sliding right here, and sliding in a big way right now. One of the things that we noted yesterday, and I posted regarding other yen pairs to be careful, which was other yen pairs were moving higher. But my point was, and we put our resistance at 837, the market got to 836. But at the time we were 825, I said, look, resistance is at 820, 837. The S&Ps were going gangbusters. And I got to give major props to Steve, who just like blew the market out of the water with his trade in the S&Ps. But the S&Ps were running like phenomenal. And the dollar yen wasn't doing all that much. I mean, it moved higher, but it's the old saying, I've fallen, but I can't get up. So right now, obviously, with the poor ADP data, we're back down on the push here with the dollar yen. We've actually had some support initially, if everything was okay, was 805. We're breaking lower here on the dollar yen. We'd come down here to some key support here with the dollar yen, and let me go on and bring that here. And we had this pivot here. The pivot at 927 is right back down here again. And I think we'll find some support here. This 877, although the break below the pivot, and that's here at 927, you can see the significance of this pivot at 927, opens the door for really a move down here to 676. I think Blake is looking in that same area himself. But my take, or what I really want, the most part that I want to share really is, I think things have shifted for the dollar. Obviously, a lot of people jump on the boat after it's going in one direction or whatever. But my take is, we have been seeing this shift for a while. We've been seeing poor data, but the market's been hanging on to these gains. But now, like, to me, the straw that broke the camel's back was that manufacturing data from 2 Thursdays ago, which was the poorest, the weakest since 2009. And from there, the dollar, it still tried to make one more high, or try to push up a little bit higher, but now we're starting to come back down. Bullard made his comments, pal, and now whether we believed it or not at the time, whether there'd be a cut in the fall, now it looks like that we may have a cut. I believe they're saying they're looking maybe in August, and potentially 4 cuts by the end of next year. So that really shifts the mode in the dollar. So yes, I know there's a lot of problems in the Eurozone, but the euro comprises 56.4% of the dollar index. So by default, the euro is being pushed much higher. And the key thing in the structure was that when we got to the 38%, we didn't even blink. It kept pushing higher. We got to the 50%. It didn't even pull off much higher. So the next target really would be the 61%, this 1318. But once we get past the ECB, any dips are going to be bought. And don't be surprised. Well, it's not even saying much, but by tomorrow that we're even taking out or challenging this 1324 area. I think we will finally find some resistance, probably around 1335. I think that's actually a level here on the daily. We can go and take a look at that. But to me, that was the take that I'm looking at is
Euro USD probing 113, by the way, Paulie.
Yeah, I know. I was saying, that's what I'm saying. It's not even saying much to say that we'd be here. When I was doing the European crossover this morning, 5 hours ago, I was saying, hey, look, we may get to 1324 by the time ECB tomorrow. Well, that's not even saying much now. We're already at 13. So yeah, like I said, we can push even beyond that. But once again, what I've tried to impart this morning, other than just the general analysis,
it is exactly what you said before. If we move back in time 6 months, what was the market pricing for the Eurozone? Exactly what it's pricing in now. Everything was a known factor. Italian problems, Greece, weaknesses, etc., etc. But what was it pricing for the US? It was pricing in more rate hikes. Theoretically speaking, a lot of people believe the booming economy, and just move forward 6 months ahead, and the divergence between what was priced in for the US back then and now is huge.
Exactly.
Huge. And the dollar index hadn't even reacted to that until a week ago, which is crazy in my opinion.
Yeah, and you hit the nail on the head. And I saw someone comment, I don't know if it was Bloomberg retweeted or Huber retweeted it. The gentleman was saying, well, just because there's cuts doesn't mean that blah. It doesn't matter, folks. You have to go with what the market perceives. So once again, you may make not a decision, but you may be thinking, look, these cuts, they won't be seen, blah, blah, the economy's still strong. Blah. Look, it doesn't matter. It's one of my favorite sayings I say is, It's all relative. So I'm not going to say the dollar was priced to perfection, but it was priced, just like Steve says, with this idea of a diverging policy. So even when we were seeing weakening data, and the weakening data didn't just start 2 weeks ago, 3 weeks ago, a month ago, we've been seeing weakening data for almost close to 3 months. But the market's been poo-pooing it, saying, well, we got a divergent policy. All the other countries were the least dirty shirt and the clothes hamper, blah, blah. But now, when the market started to, as I said, after the manufacturing data, then you actually, whether you believed it or not, had to price in a potential cut. Now, after bullish comments, Powell's comments, now you really have to say, wow, we're going to have to reprice it in to bring it from diverging to maybe not so divergent anymore, maybe back to neutral with some cuts now, and that ends up repricing it. And whether you believe the Eurozone is a very troubled area, and it is, and saying this absolutely doesn't make sense, it doesn't matter. The market has to reprice the valuations, and that's why the euro is pushing up much higher. And the thought was, well, why would this have gone much higher today? That's what I was talking about. I was giving you the example of price structure on a daily basis and price structure on an intraday basis. We came up to 1237 to 38%. Market didn't even blink an eye. We kept pushing higher into that close on Monday. Yesterday, we came into triple convergence. 1280, you can see this level coming across, 1277, the 50% of 1107 to 1448, and the 161% of this here. The market barely even pulled back and finished the day pushing higher. So you knew why. You knew that the market was going to have to push higher. The news about the Italian debt situation, that was already before we even did the crossover. And so, like I said, this thing's going to continue to push higher. Any dips are now going to be bought back, because whether you're a technical trader and you're buying it just on momentum, you're a technical trader and your technical is breaking levels, or you're a fundamental trader and you're saying, wow, diverging policy from the U.S. is now starting to go in reverse. Everything points in that direction. And one of the strongest times you have a trade is when you can combine fundamentals and technicals. You have everything going for you. And one last thing I did say yesterday with the euro was, I think things have changed, and I will impart this, is that for the last 2 months, 3 months, you could buy the dollar on a dip. You could buy the dollar on the breakout. You could wake up in the morning, scratch your head, open your eyes, and just hit the buy button and buy the dollar. And guess what? You're going to get paid. Whether you get paid today, tomorrow, next week, you're going to get paid. Well, guess what? Now the opposite's the same. Now,
you also had the positive.
Not to advocate a buy, but I'm just saying is now, look at the euro. If you bought it late this day, you got paid. You bought it at the top, you're still getting paid. I'm just saying the momentum's going the way, and it's not so much because the euro is such a great buy. It's because 56.4% of the euro is a composite in the cash dollar index, and folks are selling dollars because it's being repriced in. But I mean, I've already taken up enough time, but I thought it was more important to give you an idea of the way that we look at the analysis on the European crossover. And then I'll let Steve go on and take over from here. I thought we're in a shift in the dollar. And actually, we just hit our bias chart support here in the cash dollar index. So I just see that. Our bias chart support here was 96.79 here. And we just took that out. We just took that out by about 3 pips. So we're starting to see the move up here to 96.81. And like I said, with the ECB coming up, potential TL, TRO, we'll probably see the euro stall up in here. Maybe we'll dip back a little bit. But that's all I got. I'll go and let Steve take over.
Thank you very much, Paulie.
Paulie, always great to hear you, man. And really fantastic analysis. Well done.
Indeed.
Oh, thank you. Appreciate this.
So, Stelio, what else did we have before I go to charts?
We've talked about it all, actually. I mean, we had some, actually we had for once some positive data out of Europe. Services PMI came in better than expected in Germany and Spain, and in the overall Eurozone indicators better than expected. Same with the UK. So a slight reprieve for the Eurozone, although the majority of economic data has been deteriorating in the last few months.
That is true.
And ADP we talked about. I mean, that was it really. Australian GDP also came in 0.1% worse than expected, but really after the RBA yesterday,
it wouldn't move the market.
Neither here nor there. So I don't have much more to say actually.
By the way, check. I know that you like it. Check gold. It has
I was
Yeah.
saying 1365 is a big level. Actually, if it gets close to that, I'm going to probably scalp it short with a stop just above 1365, maybe 67, 68, because it's probably going to react there. But I think metals are
Unfortunately,
getting
here
there.
I was in the right side of the market down, then I was in the right side of the market up, but bad timing on the upside. I got taken out from this pullback because initially I was looking at this trend line. So, I thought we had broken out.
Yes, I remember
And,
that.
you know how the market can be. So,
Yeah.
It threw me out of this trade. I really believed in the upside after I saw that this move lower had corrective characteristics, but, whatever, it happens.
Yeah.
Obviously, as you see, gold is coming already on major resistance area here, this previous high at 1346.60, and above that we have the 1355 to 1360 resistance area. You can see that this is also a huge triangles resistance. So if we take out that level, then gold is headed much higher. And silver is finally, as you see, catching up as well. It was, making several attempts to break below this descending wedge. It gave us a couple of little overthrows, which is quite common with wedges, but it's now really taking off. This is today the 6th consecutive up day. It's now slicing through the 1480 area. I had mentioned how important that is. It's also slicing through the 200 and the 50 daily moving averages. So I do believe that pullbacks should be bought from this point on. Silver, gold, both looking very good. Obviously, I'm not advocating that somebody should be buying at the highs of the day after 6 consecutive up days. But I do believe that we should be looking for opportunities to buy the dip instead of the opposite, because it is obvious that something is changing in these markets. If you read our blog post, we had also mentioned Euro-USD slicing through this descending wedge, multi-month, 10-month descending wedge, currently testing the 113 resistance area. As Paulie mentioned before, I'm also a strong believer that we're probably going to take that out, and at the same time, the USD Swiss breaking below this ascending wedge, which dates all the way back to the end of 2017. So this is, a huge technical break that is taking place here. Currently testing horizontal support area at 98.50. The oversold RSI reading on the daily is also another confirmation. Again, you might want to, of course, wait for some type of a pullback to align yourself with this big reversal. And here is the USD yen trying to hold this horizontal support area. But if it actually fails to do so, I'm afraid that then we're talking about a major technical event here as well, because we are probing the area below this multi-year symmetrical triangle. And that is obviously something that you should be taking very seriously. Still, third consecutive day that we're trying to hold this area. Will it manage to do so? I wouldn't bet on it for sure. I would rather be short other dollar pairs, to be honest. But that doesn't mean that the USD yen is going to be spared. And here is the trend line that Paulie was showing. I've drawn it a little bit differently, but it doesn't really matter. This is the purple ascending trend line that has defined the trend since February 2018. We're taking this out today. Just below, we have this ascending channels, blue trend line support. One way or another, I do believe, I'm also taking a cue here from the impulsive nature of the move lower. It's not just the fact that we've moved from 98.30 to 96.80 at the moment. It's the fact that we are showing some very strong momentum to the downside, a strong momentum that we haven't seen in a long time. Taking into account also everything that Paulie mentioned from a fundamental standpoint, my gut feeling tells me that this is the real deal here. So, we are going to start taking one support level after the next, in my opinion. And, that should also, shift the market in a totally different direction. Now, having to do with stocks so far are enjoying the, direct hint that, there's going to be more stimulus. I expected to see an initial reaction higher. It's actually stronger than I expected. I took profits on half of my position yesterday. I'm still holding half here. Now, the question is, will the market, is it? Start stuck on USD Swiss. Okay, nice. I really have no clue why this is happening. Let me resolve it. Okay. Let me know when it's going to be back. Okay, Joe, let me know if now you can see the S&P. You see black, okay. I really have no clue why this is happening. Let's see if this is going to work. What about now? Still black for you? Okay, let me share a different screen and see how that's going to work.
There you go.
Is it working now?
Yeah, I thought it was working before it went black for other people. I still had a chart up till you played with it. Anyway, it's working. See S&P up there, Steve.
Okay, cool. So S&P retesting now this previous support area as resistance. Quite a nice reaction from equality target. If you see, I had two targets here, 2730 and 2720. 2720 was the beginning of this wedge. It was also the 38.2. 2730 was, though, the equality of this corrective move, the two legs of the corrective move. So that one seemed to have done the job. Yesterday, we completed a really powerful morning star formation. So that is something to consider. So now what I don't know is how long the market is going to stay happy with more stimulus, or if it's going to start focusing on the fact that for us to be getting more stimulus before we even technically go into recession, they might start thinking that things are not rosy at all, that the market is definitely not pricing in, at least not on stock valuations, any real recession coming. So I wouldn't bet that the market can find enough support from monetary stimulus hopes to push to new highs. But having seen how irrational the market can be, I wouldn't be surprised either. Okay. NASDAQ, as you see, is at the same time testing a descending channel, descending channels resistance at the moment. So, I want to see if the NASDAQ is going to break higher. It was weaker during the past few days in comparison to the S&P. So let's see if it can actually start climbing higher as well. The DAX found support, although it breached through the 11,800 level, which we had said how important support it is. It found support at the nice confluence of the 38.2 and the 200 daily moving average. So this was definitely also an important level. I even said it when we were slicing through 11,800. I said, be a little bit careful because we have this confluence, which is just below at 11,625. It actually found support there, but on the other hand, it hasn't broken back above this channel's support, which might act as a resistance. So I would be a little bit careful with the DAX. It might find resistance once again anywhere between 12,080 and 12,200. I wouldn't be jumping the gun being long as long as we remain below that, although so far I can easily count the move lower of the DAX as a corrective move. So I wouldn't be surprised if we just continue higher from here. But as I said, I want to see a little bit of a higher level before I can, more safely conclude that that was it. FTSE also, as you see, it's very interesting that technical levels do matter, and for example, correlated assets can be finding different areas of support, but at the same time. So FTSE also found a low at an important horizontal support resistance area, 7,100. That is an area that has played a role multiple times in the past. It acted as support once again. So, the picture here is, the technical picture is more or less the same we have for the DAX. So, nothing really different to say here. Now, the Kiwi has really, started producing after initially breaking out of this wedge. We saw very tepid move to the upside. We came down, we retested this wedge. I said, I'm very unconvinced that this wedge is going to play out because, we're about to retest the lows. But if it is to play out, we really need to hold this area. And we actually did hold this area. And once that happened, we started seeing this acceleration higher. As I said, even 2 days ago, when we started accelerating to the upside, I see no real resistance until 67 cents, and we're already quite close to it. So 67 cents is going to be important. If we see reaction from there, we can even still see, bears take control of the trend once again. But if we do break above 67 cents, I think that we're going to have a totally different game to play here in the Kiwi. So Kiwi looks good, even if you have a look at it against the yen, because as you see, even against the yen, we had the exact same picture. We had a descending wedge. We had a single day overthrow below that wedge, which I bet got a lot of people trapped on the wrong direction of the market. And then we just reversed. We started with this piercing line on the daily chart, which is a nice reversal candle. And now we are on the third consecutive update. So Kiwi yen looks good as well. Aussie USD and Aussie yen not looking as good. So I'm focusing on those because if you really want to play, one of those commodity currencies long against the USD or the yen, I think that the Kiwi at the moment looks better. And, if you have a look at what is happening with the Aussie Kiwi, you're going to notice that the Aussie Kiwi is breaking below a horizontal support area as we speak. We held this 1052 area after breaking higher. We tested it 2 times, and this is the 3rd time we're testing it, and it seems like we're slicing through, and definitely that's quite a bearish signal in the short term, which points to a possible resumption of Kiwi's overperformance over the Aussie. Now, I know that Paulie showed it, but I want to briefly say here, having to do with the USD CAD, that the USD CAD is currently testing confluence of supports. This ascending trend line support, it's this horizontal area. You see that we found a low here at 133.80 multiple times. And I seriously believe that if we break below it, there's going to be more downside coming. I do believe that we're going to be moving down to retest probably this longer term ascending channel support, which currently confluences with 61.8% fib of that last move, and those pass from 131.20. So I think that the USD CAD can easily make it to 131.20 if we push through this confluence of supports at 133.80. So I think that's quite an interesting pair to monitor as well. It seems to be holding for now. Intraday, we were we were probing the area below it just a while ago. We might even see a little bit of a rebound from here, in which case I would probably look to short it. I mean, if we see, for example, a retest of the 134.30 area, I would be looking at that as a nice selling opportunity. At least, that is my point of view. So let me see if we have any questions.
I don't think Kip is here yet, Steve, so you could continue. I think he went to the GoToMeeting. Anyway, I sent the new link. I don't see him. If you're here, Kip, I'm not showing you when I'm searching.
If he's here, he can also do is raise his hand. There is a button to raise hand.
Right.
So if he does that, we can see it and get him from there. Okay, let me see questions. This way, yeah, we talked about all that. We talked about all this. View on pound yen. Sure, let's have a look at it. Here it is, pound yen. So as you see, the pound yen is, remains quite weak. I mean, yeah, we did see a reaction. We tried to bottom out 2 days ago, but we haven't even, after 3 days of, trying to stabilize, we haven't even retraced the last bearish day that we had. So just by looking at that, I would have to say, yeah, the RSI has also been drilling for oil. I mean, just look at it. It hit 18.
Kip is saying he got a white screen, also having power outages, number to call in from cell. Is there a number on Zoom?
Yeah, there is.
Has anyone tried it yet?
There definitely is. Let me find it for you, Coach. Webinars space. Give me a second because I'm on my other screen trying to fetch that for you.
Well, I'll turn my Skype back on. I turned it off for the interview, but.
Which country is he in?
I think he's in the US.
Okay, copy the invitation. And let me see, because I think there is. I've seen it somewhere. But it's a good question. Where is it? Webinar. And this Q&A is enabled. Sorry, trying to find it.
It's okay, buddy.
As usually, you always stumble. Telephone and computer audio. Audio, telephone dial from United States. Yes. But where is the number?
I don't know why you couldn't access it via desktop, but.
Let me see if it's on the registration form somewhere. No, it isn't here. So bottom line, pound yen, to finish up as long as I'm looking for this. Pound yen doesn't look like a good buy to me in comparison to other alternatives, okay? So I think that if you're looking to buy something against the yen, I wouldn't be doing that with pound yen. Okay, I would be, trying, other stuff. For example, I just showed you the Kiwi yen. In my opinion, the Kiwi yen looks much, much better than the pound yen. So why try to buy something that is relatively weak because even if they both end up rebounding, I think that, for example, Kiwi is going to do better. Okay. Oh, okay. Rick is giving us the number. Here it is, coach. I'm going to put it on Skype. Okay.
Yep.
And you want me to give you the ID, the webinar ID?
May as well give it all. Give it to me. Give me all.
There you go. And this is a webinar ID, the second one. Okay.
Yeah. Thanks.
Perfect. Okay. So let's see what other questions we have. CAD yen. Yeah. Let's have a look at it. Thank you all for posting it, by the way.
Yeah. Thanks, buddy. What a community.
So CAD yen. CAD yen broke below this triangle, and once it erased, I was expecting a rejection and continuation lower. All that happened. We're now toying around with this important support area. You can see how important this is. I'm zooming out so you can see that this is the 61.8. It's also previous support area. It has acted multiple times as support. We're toying around this area. I'm going to have to make the same comment that I did for the pound yen, meaning it doesn't look that good to me to try to be long. I would rather be long other currencies against the yen. Now, it hasn't even yet managed to post a higher high. So, for example, I would want to see a move at least above 81.30, to say, okay, there's definitely something happening here. So I'm not doubting that it can also rebound. What I'm doubting is that this is the proper choice of something to, be long against the yen. So, my comments are more or less the same they were for the pound yen. We have any more questions? Let me go through the cross rates, by the way. So, cross rates. Eurozone. Euros is so far held, I said that a couple of days ago, so far held this little channel. So, I'm not writing it off yet. I would be very careful because we got rejected from that area, but so far this can prove to be corrective. So Euros is one pair I wouldn't be trying to short yet. Now, what you could be trying to short is the Euro Kiwi, and Blake actually warned in advance about that. We had written in the chat room as well. You
Okay,
can see
so I believe he's here. Total one call listener. I don't know how I'm going to be able to
let me see.
Make him the panelist.
Attendees, total one phone call listener. Yeah, I can see that as well. Name?
Kip Harridge. But I think it just shows up under this, right?
Yeah.
So you can't make call-ins presenters or panelists.
I'm not sure about that. I haven't had to look, about that.
Right. We're learning as we go.
Yes. Total one phone call listener. Yeah, it doesn't give us the name somewhere, right? So what is the problem with trying to log in from his computer or a mobile device?
I think I had problems with that, and he mentioned something about power outages, and he was getting a white screen. Anyway, doesn't matter now.
Yeah, it doesn't.
So why are you bringing it up?
Yeah, I'm going to look into it afterwards for when it happens again.
Okay, so I don't think we're going to have an interview.
Yeah, so let me finish with that. So Euro-Kiwi has broken below this ascending channel, has broken below this head and shoulders formation neckline. As you see, an extension, the implied target would be at 169. So a much better short. Keep in mind that on the daily chart, we're currently testing the 200 daily moving average. Okay, so we might see a pullback from here, but I do like Euro-Kiwi much better to the downside. It also points again to what I said before. Kiwi seems to be overperforming against the Aussie at the moment, and we have no reason to want to fight that. Okay, pound Aussie, so far finding support at previous low, but I would be very, very 200 daily moving average also there, but I would still be very, very skeptical in trying to fade this. We might see a temporary rebound, but it looks to me like it might be moving lower. And you can see the pound kiwi looks much better. I like the fact that we had this false break higher from this wedge, this overthrow, you can call it. And the move lower since was, has been very impulsive. I think that any rebound from here towards 194 is going to be a nice selling opportunity. Okay.
Yeah, Kip said he had 2 members of his staff try and get on as well. We're all getting white screens. No clue why.
Okay.
Anyway.
Okay. Let me see. Okay. Yeah, I'm not finding any way that I can give him. Yeah, I don't see any way that I can give him like host through the phone. I'm gonna look at it offline.
Okay,
so
buddy.
next time this happens, we can actually know if we can do something about it or not. Okay.
Okay. We'll see everyone for ECB tomorrow.
Yeah, big day tomorrow.
Yeah.
ECB.
Yeah. I'm hoping Draghi talks the market, talks the euro down. I'm long dollars, looking for a little pop here, not a big move, maybe back to 97.5. And I'm going to fade Draghi tomorrow if he tries to talk the euro down. So how's everyone? Everyone have a great day. Steve, thank you. I'm getting comments on Twitter. Listen to this from John Davies. I've interviewed him. Absolutely brilliant discussion on Forex stop hunters at ForexAnalytix with Steve Bulgaridis regarding FX this morning. I strongly encourage attending ForexAnalytix daily pre-market meetings. So that's from a pro, okay? Been in the business 40 years.
Thank
Good
you
job,
very much
Steve.
for the kind words.
All right, everyone. Good hunting. See
you all tomorrow.
Yeah. You remember, don't just count your pips, count your blessings. And where do I end the meeting since I don't?
I'll do it, Coach.
You end it? Okay. Goodbye. Sorry about the interview. What?
Yeah, actually, don't worry. I'm going to do it. Yeah.
Okay. I'm sorry. We'll get Kip back. Okay. We'll get him in here because I had some great things I wanted to ask him. All right. See everyone tomorrow. Don't forget to join, and don't forget to go to Forest Park so that you get a rebate check every month. That's our sponsor on the website. Adios.
Bye-bye, Coach.
See you, buddy.